I want to answer the question why I don't care about the Sharpe ratio this morning. And it's a question that was asked to me. I don't want to explain that. I don't ever talk about Sharpe ratio. I'm going to tell you why. What is the Sharpe ratio? What is the Sharpe ratio of the system, and why I don't chase that? So it's hard to come up with a good automated trading system that's profitable. This is one of our top strategies. Recently made equity peaks. The last 2 trades were losers. Here is the monthly return. So the Sharpe ratio is basically the average monthly return divided by the standard deviation of the monthly returns. And so you see that here. And here are the monthly P&Ls of this strategy. Now there is a big standard deviation in the monthly P&Ls. So like I said, it's hard enough to come up with a profitable trading system that works out of sample. And we have that here. We've had this strategy for a while. We've traded. It's one of our top strategies in the portfolio. I really love the way this strategy works. And trying to develop a strategy that makes about the same each month is chasing the wind, in my opinion. If you're going to have a day trade system that's profitable, that's good. If you're going to try to get a good strategy that has good average trade profit, has good return over reward, and then adding the criteria to make about the same amount each month, that is beyond reasonable in a market like the NASDAQ. Day trading futures contracts, you're going to get some standard deviation in your strategy. You try to narrow that standard deviation by diversity, but I get the reason why people want Sharpe ratio. Most people want an monthly investment they can count on. So the idea is that I want a monthly cash flow investment that I can count on. We don't have the 4% risk-free rate of return anymore. You can't put $2 million in a CD at 4% and get $80K a year and just live a very simple life, very low, simple life, minimal life really, but you can be comfortable on that. If you have $2 million and you can get a 4% CD, we don't have that risk-free rate of return because of the Fed, and you seek that in your investments, and we work on achieving those monthly profits through diversity, but we do not chase Sharpe ratio. Our standard deviations and monthly results is going to be large. You can get Sharpe ratio, you can get high Sharpe ratios in short-term time periods. The example is the stock market the last 18 months. Looks a lot like that because the Federal Reserve is controlling it. It's forcing it higher, but as well as I do that there are 50 and 60% drops in the stock market, and those can take some time to recover, and we'll eventually get that in the stock market that we have now. It can't be perfectly engineered by the Fed, and you can also potentially over short-term time periods get that in option writing. Option writing gives you the ability to maybe collect premium during a stable volatility time period, but this strategy is not going to do that. I'm not going to chase about the same returns. When you want a high Sharpe ratio, you're saying you want about the same amount of P&L each month. So you want to, in essence, you would end up potentially reducing some of your big winners and eliminating some of your losers. And I don't know how to do that in trading systems. For example, this strategy has a 0.6 Sharpe ratio. 0.6 would not be considered. Someone who chases Sharpe ratios would not like that. If you also consider high percentages of profitability, you have 33% winners. I love this strategy because it cuts losses and rides winners. If you take a look at the trades here, we have a $300 stop loss in this strategy, very tight stop loss. So you're going to get lots of losers, 11 in a row, maximum consecutive losers over the last 3 years. Loser, 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 and the big winner. Your biggest winner, 5,115. Your largest losing trade, 325. And so that is how I like to trade. Not all of my systems are like this. A lot of them can be between 45 and 50% here. And this one is at the extreme of very tight stop loss, low percentage of winners. And you get this type of equity curve. Chop, 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 boom. Chop, 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 boom. And so that's what I like. That's what I prefer. And that's what works really well in day trading. You see a lot of people chase high percentage of winners as well. I don't know how to do that. Either 55% is pretty good for your average of all your strategies that you're trading. And so I have a diversity of strategies. Some of them are right at 80%. I do have some strategies that are 80%, but my biggest winners are usually between 30 and 45%, because we cut the losses and we ride the winners. Like I said, $300 stop loss. This includes $25 round turn slippage commission, and we let the winners run. So that's the answer to why I don't care about the Sharpe ratio in day trading. I'm going to show you some trades. Here are some recent short trades. This one's plus 2,070. Like I said, the last two trades are losers. Two trades right here stopped out on September 21st, minus 325 each, minus 650. Then you have plus 2,070 here on a short trade. You have plus 1245 here on a short trade, and you have plus 2395 here on a long trade. So this is a better way to trade, a better way to increase your account size over time, and so that's why I trade this. And comment below if you have any questions, any insights. Would love to hear your opinion. That is where I am on Sharpe ratios as related to algorithmic trading systems.